Hi, my name's Paul Locke. I'm the Managing Director of Pan Asia Metals. Pan Asia Metals is a battery and critical metals explorer, and we have lithium projects in Southeast Asia. In fact, we have the only lithium projects in Southeast Asia, and our plan is to take our product downstream and deliver into the entire auto market, which is the fourth largest auto producer in Asia.
Hi, my name's Jeff McNamara. I'm co-founder and non-exec director of Tesoro Gold. We've made a significant gold discovery in Chile, in South America. In fact, we've identified a new district, an intrusive-related gold system in Chile. We've established our maiden resource of 1.1 million ounces at 1.12 grams per tonne, and we expect to release a scoping study in the coming weeks. And we'll look to move this project into production. We're 15 kilometres from the coast on the Pan American Highway and have very good infrastructure.
Thanks, guys. Appreciate you coming on. Today we are we're going to talk about the markets a little bit and maybe how retail investors feeling a little bit nervous, need a little bit of hand holding, and we're going to try and identify a few clues that people should be looking for. But first, I've got to talk about how you guys are feeling. So, Paul, pretty tricky markets out there. Have you had to adjust the way that you are running your business, your plans for the near future?
Well, Matt, in a way, yes, but it all comes down to the cash position. So right now we've just finished the quarterly reporting season on the ASX, and there's quite a few companies out there with very low cash, so they're nervous because they've got to go into this market and raise money. We've been pretty careful, and our cash position is very strong, so we don't have to worry too much about our spend. We can maintain our programs, but we are a little concerned that the underlying market is still very strong, and if we don't see a turnaround in our sector, in the lithium sector, we could be raising at a low price. But I don't think that'll happen.
And Jeff, I mean, same question to you. Obviously, Paul's talking about lithium, if you're feeding into the EV thematic, and we'll come back to thematic in a second. But you're in the gold space, with Tesoro. You're also in the copper space with Carpia. How are you feeling about those commodities? Are you leaning towards the copper project, or how is gold treating you?
I look at longer term. I look at gold pretty simplistically. I look at it over 5 years broadly, and if you look at gold, 5 years ago it was about $1,200 an ounce, and today it has gone down, but we're sitting just below 1,800. I'd expect in 5 years' time we'll be in the low 2000s for the gold price. We've seen an extraordinary amount of money printing. We're now seeing interest rates rising, and typically in those periods when interest rates go up, you do see gold soften. And also at this time of year, the summer in the Northern Hemisphere, you see gold soften as well. So I'd expect as we move into the back end of the third quarter and the latter part of the year, you'd see gold strengthen again. And I think it'll be interesting to see what happens in the US with the midterms. That'll also potentially have an impact on gold. But I'm feeling confident on gold. As with most of the thematic with commodities, whether you're in the battery, EV thematic, or the precious metals, fundamentally there haven't been a lot of big new discoveries made, and the majors are looking for other assets to bring in and to grow their own resources and reserves.
Okay, and Paul,
I would have thought too. Sorry if I can jump in, Jeff. For the gold guys, you mentioned we're up from 1,200 5 years ago, Jeff, and back then, a gram a tonne was still pretty good. So on an all-in sustainable basis, in this market, it's pretty good for the gold guys anyway, isn't it?
Yeah, thanks, Paul. A good point. I think the gold price is strong at the levels it's at, but I certainly see more upside. And I think fundamentally when you look at the thematics of all the commodities and the prices over the longer term, and I think this is the crux of what people need to look into, is that if you look at these things over broader timelines, not the last 6 months where we've had a correction, not the last 12, 24 months, if you look at these thematics over 5 to 10 year periods, you can see most commodity prices have appreciated gradually over time. And during these times, you do have corrections, and we'll continue to have corrections both in the commodity pricing itself and the equity markets as well.
Right. Okay. So you're talking about, you got to look long term. You got to, in a way, kind of, for this is a conversation for retail and maybe even some family offices, smaller family offices, where we're just trying to help people feel a little bit more comfortable about the environment that they're in, and address some of the concerns. So, longer term view, and I think Paul, you talked earlier about, theses or thematics that you're investing into. So let me ask you this, Paul. Are retail investors right to be nervous now? Are you nervous that they're nervous?
We're nervous because they're nervous, but they shouldn't be nervous. So my view is an investor should look at the company and where it's, where they think it's going. So most explorers or developers need to work on a 10-year timeline, because it takes that long for an asset. So, you might go through several cycles while you're doing your feasibility study. And if management's got confidence in the asset to go through those cycles, that's your first hint that things in the longer term will be okay. But particularly with the LIBs and EVs and that thematic, the growth in EVs. So I just read today that in 2021, there were 6.6 million EVs sold. That was double 2020. And I think we're selling more EVs now in every week than we were in 2012. And that's growing. So the underlying market has not changed. There's still a lot of investment in battery plants, a lot of investment in EVs. There's something like over 400 models of EVs now. So when we look at what we're doing and the longer term, we're not worried about that. In fact, you've just got to write it out and not worry, just write it out.
Okay, but I'm going to stick with you, Paul, just for a second, and then we'll come on to Jeff and gold. Let's talk about thematics, right? So markets, they come and go. We're in a cycle at the moment, and the good news about cycles is we cycle out of them at some point. The question is when. But the industrial players, the OEMs, the automotive manufacturers, they are making plans, multi-decade plans here. So should we, in a way, be looking to them for clues as to where certain commodities are going?
Absolutely. Even Stellantis, they laid off some workers, but they're still producing more cars than, their production is going up. And then you've got Tesla, which is trying to find material for batteries, and Ford is too, and all of these other automotives. So I think that's a pretty good signal of where the market's going and why investors can sort of relax a bit if they're in the right commodity. I mean, maybe in some commodities it wouldn't be so relaxing.
Right, so that's a nice, easy thing for you to work out. Okay, all of this huge industry, hundreds of billions of dollars being invested into the EV thematic, and lithium is one of the things that you are going to feed into the Southeast Asian market, which is great. But for gold, Jeff, what's going on at the moment? We're reading about market manipulation by JP Morgan. Price action has been weak of late. What gives you confidence that it's all going to be okay? Well,
I think, if we look at what's happened in the market, one of the interesting things, cryptocurrencies have had a pretty significant correction. If we look at where gold did go down, it went below 1,700. It's nearly back at 1,800 already. And as I said earlier, this is typically actually a soft time for gold this time of the year. So that Northern Hemisphere time, the old sell in May, go away. So, July, August, significant holiday periods in the Northern Hemisphere. And again, that linked to when interest rates are physically rising, typically gold tends to soften as well. So my view is I'm actually pretty happy that gold's managed to bounce back to nearly 1,800 already. And I expect as we move towards the back end of the year, we'll see it appreciate further.
Okay, so Jeff, sticking with you, we've seen a lot less buying of physical gold in China and India. Obviously, given inflation is hitting everyone's pockets at the moment, less discretionary spend, less disposable income. It looks like a tough environment for gold out there. But again, coming back to your comment about crypto, do you think would you expect to see that movement back from crypto back into physical gold, or do you think those crypto guys will go elsewhere? I mean, what's giving you the sense that people will come back?
I think you'll see some of it move back to gold. I think that's just a natural hedge. I think, people are very nervous. I've been in the US quite a bit in the last several months, and, I touched on the midterms earlier. I think people are pretty nervous about what's going to happen there. There's obviously the Ukraine-Russia conflict as well, which is, really impacting all commodities, soft and metals, both physically by reducing some of the supply, but also, again, general concern. And people do turn to gold as a store of value, as they always have, and they always will. And in a pretty significant market correction that we've seen now, we've seen some of those more speculative stocks have very large corrections because fundamentally a lot of those businesses weren't sound. You go back to Paul's point, what you need to look at is, does the business have cash and does it have a real underlying asset? Has it made a discovery? Can it show some preliminary economics on that asset? Can that asset continue to grow and can it be extracted? Okay,
and so Jeff, I'm going to stay with you again, but is in a market like this, even before kind of COVID, is moving to a very environmentally focused narrative out there. ESG has become very prevalent in the last 2 years. Funds have rebranded themselves with ESG in the title somewhere. Although I notice the SEC is kind of clamping down a little bit on that. There's an audience out there that says that mining needs to up its game. It needs to be held accountable and needs to do things better. Do you think that gold, because of its lack of utility, is getting a sort of unfair hearing out there compared to, say, battery metals? I know you're involved in both. Are you finding it easier with your copper project than you are with your gold project in terms of getting a fair hearing?
I think it is easier with the battery thematic. But I think what a lot of people don't know is there's actually more gold from a value perspective in a mobile phone than there is any other commodity. The use of gold is growing in electronics. Certainly not the same levels of growth we're seeing with the base metals and the battery thematic. I think gold is sort of looked at as maybe a bit older and not as relevant. But I think it's actually these times when we'll see some of that relevance come back. But again, on that ESG point, there are a few aspects to it. Is okay, we want to electrify the environment, but I think, as you pointed out, mining in general needs to get better, not so much at what they do, but how they put themselves forward as to what they do. Because for me, we've always actually practiced ESG, because if you don't engage with your stakeholders, and if you can't get things permitted and build projects, that's a fundamental failure of ESG.
And okay, Paul, we've seen companies, in difficult times, you kind of do what you need to survive, right? And I think I buy your point earlier that cash gives you optionality, so perhaps you've got a choice as to how you move forward. But and that just kind of interests me in terms of the way that companies try to stand out, the way they one, survive actually, but two, stand out from the rest of the peers. Cash is one way of doing that. We've also seen companies, rushing to make announcements about MOUs, non-binding MOUs, and we're seeing barely worth the paper they're written on, or getting agreements in place, or telling us about an agreement to have a conversation about having a conversation with someone in the industry. So these sort of non-announcements out there. I mean, well, one, do you agree? Are you seeing a lot more of those? And two, what do you think the value of that is to again, retail shareholders and how they should interpret that?
Well, I think shareholders or potential shareholders, if they're looking at a company and it's going on about MOUs, should look at that through quite a critical lens. One thing the market or shareholders or investors should keep in mind is that in a lot of cases, this is a commodity product. And providing the project is doable, so it can get permitted and so on, it's highly likely it will sell its commodity product into the commodity market. So right now in the battery metal space, we've got, and particularly in lithium, there's been a lot of hype around an MOU with Tesla, an MOU with Ford. But no one is in the market talking about the agreement Ford has with, the disc brake manufacturer or the tyre supplier. And it's essentially exactly the same thing. So I think investors get a bit enthusiastic about MOUs. And like you said, an MOU is essentially worthless until it becomes an agreement. And it won't become an agreement until whichever company it is supplying. Another thing about MOUs too is that they can actually hamstring a company. So if you've got a company and it's well positioned and it wants to jump into an MOU so it can wave the flag, that flag waving is an expensive exercise because you've just cut yourself off from all opportunities. So just recently I had a broker call me and said, can you just sign an MOU for a bit of your concentrate so we can talk about it? And I said, but why would I do that? Because our whole purpose is to produce chemical. So if I sign away my concentrate, I can't produce chemical. And I thought that was slightly mindless in a way. I can see where he was going.
He was going to his bottom line because he's got a different business model to you. That's where he's going.
Well, that's right. He's looking for a short-term gain, and we hobble the company for the life of the project. But investors have got to look at that too. So if it's a commodity product and you're a long way from a complete feasibility or a long way from banking, because that's where it really matters, the financiers want to see agreements, then it really probably doesn't matter too much.
So what are the available tools that you approve of then for companies? If there's some little cheap wins there, short-term wins that companies just trying to stay relevant, trying to stay on the front foot and on the front page, as it were, what do you think they should be doing, and what should I, as a retail investor, be looking for from a well-run company?
This is something I think about a lot because, like most companies, our share price has been under pressure, and I feel that our company, Pan Asia Metals, is undervalued when I compare it to the peer group. So my question to me all the time is, what do I need to put out in the market to help investors understand our proposition? And we have been reluctant to just pump out announcements which are fairly empty, just to put something on the ASX. And it's something we sort of tackle with quite often, or think about. I look at companies and they'll put out an announcement about incredibly high assays from a rock chip. The first question I ask myself is, well, that's great, but is it a channel or a rock chip? And is this series of assays over a kilometre or over 10 metres? And you literally see that. You see companies which will put out assays over, 100 metres or so, and it really doesn't mean that much at all. And Jeff would understand this too. And so you need to you want to set yourself aside and say what we put out into the market is credible. But a lot of the time, I think investors are looking for that quick, probably a little bit of an adrenaline hit. They put out an announcement, a bit of a share price move, but it doesn't mean much.
So, Jeff, I mean, you were impacted by this as well, right? Because there's the way the market expects information just by sheer weight of the fact that it didn't have everyone doing it the same way. If it doesn't happen the same way, they go, oh, there's something wrong here. But you guys went early with the maiden resource. I think you're under some pressure to put something out. It was below what the market expected, but you felt you needed to put a stake in the sand at that moment in time. And I think that's impacted people's perception of you. And now you've gone on and done a second research, which is great. But do you feel that, one, would you have done things differently in hindsight? And two, how do you signal to the market going forward that you've actually got something good going on there?
Yeah, no, absolutely. I think, that came out too early and the market, responded accordingly. It disappointed the market, and it's hard to, regain traction with the market. But I think we're starting to do that now with, a much larger resource, significant increase in grade. And I think part of that comes to, fundamentally back to geology, right? Understanding the deposit. We completely remodeled that, and that had helped with all those changes, that increase in ounces and nearly a 40% increase in grade. I think the other thing, to stay relevant and sort of touching on a couple of points Paul raised, is he talked about cash. I mean, it's not only important to see what the business has in the treasury, but how do they use that treasury? I mean, one of the great things about Tesoro Gold, the management team there, 87% of that capital that's been raised has gone directly in the project. So keeping your costs down, putting the capital into the project, people who run businesses lean, I think that's very important for investors, retail and new investors to look at and to understand. And the other thing is, what exactly are they spending that money on? As Paul alluded to, MOUs aren't really worth anything. In my mind, you want to see companies still doing things in the field. Is that drilling? Is that studies? Yes. And we're doing that, but we've reduced the number of rigs we've got on site, right? We're conserving capital by continuing to de-risk the asset, but we're doing that at a slower burn rate to conserve cash. So we don't end up in a situation where we don't have capital. But I think that's important to understand, the burn rate and what that capital is being used for.
I think you'd agree with that.
Yeah, I would agree with that.
Yeah.
Yeah. You look at some of these companies and they're very top heavy, and capital raisings really are a top up, so they can survive another 4 years until the next fad happens. But investors should look at where the money's going, what the company's trying to do, and is it credible? Jeff's ratio there is quite strong. I think we're a bit below that, but we're in a very low cost operating environment too, where we've got a lot more bang for our buck. That's also important. I think Jeff is too.
Well, so tell me that neither of you. I talked about ESG a bit, and I think Jeff, you did too. But no one's kind of mentioned, which seems to be like the go-to conversation since I start talking to someone, which is net zero carbon credits, carbon neutral, etc., etc. I mean, certainly in your case, Paul, given the game that you're in, are you looking to hook that up to your narrative? Is there some greenwashing coming down the line?
Well, this is the trick, really. So we have put in place a fairly comprehensive ESG strategy, and I think it's becoming a requirement. The reality is, when you look at the WEF's requirements and the UN's requirements, the UN has 17 sustainable goals. For a company our size, and for any company really, it's impossible to deliver on all of those goals, because some of those goals are global in nature. But we've identified 7 goals, and we focus on 3, and we can deliver on those, and that's education, consumption. I think the other one's water use, which is doable for someone our size. And as the project gathers steam, we can add to it. The big one for investors is environment. Clearly, most mining operations will have an environmental impact, regardless. But you've got to weigh it up. So, are you delivering something to the market that's required, to move forward? And with climate change on most people's agenda, the only way to achieve some impact in climate change is to move down the renewables path, which requires critical metals and so on. So a lot of these projects will have some impact, but we've got to look at the bigger gains. Are the bigger gains worthwhile? And I think they are. And then when it comes down to carbon neutrality, there are some projects out there which could possibly deliver on that. I'm thinking about the geothermal, but you've still got the question of DLE and whether that'll be successful. But if your project is located in a place where there's a lot of sun, then you've got solar, and Jeff's project is definitely in that situation. We're in that situation. We also have a large hydropower station about 80 k's from us, and that grid runs by our project. So that's another source of renewable energy. So we're very focused on ESG, and we're definitely not greenwashing, but I can see investors are looking at that, and quite naturally, until you deliver, there's a little bit of skepticism there, and greenwashing seems to be the key word of the day.
Well, it is. I mean, Jeff, I've got to come to you, right? Because Chile seems to be clamping down on certain mining practices. Miners are going to have to adapt and change the way that they mine in country. It seems, certainly with this current government. Have you? I mean, that must be a big consideration of yours, despite being sort of a let's call it advanced exploration or early stage development project. You've got to be thinking ahead there, haven't you?
Yeah, and look, part of the reason we chose the area we're focused on is because we have access to existing infrastructure. Our metallurgy, all our metallurgical test work's being done using seawater. I think for people operating in Chile, that's probably the biggest risk you face. We're in the Atacama Desert, driest place on Earth. If you can use seawater for processing, then that probably mitigates the largest risk you have. As Paul alluded to, we will be using somewhere in the order of 25-30% of our power will come from solar, but we'll try and tap into the existing infrastructure to minimise, not only the development costs, but building additional infrastructure that's not required. We have also a focus on diversity and local employment. So, in excess of 90% of the people we employ are Chilean nationals. And in fact, the operation in country, there's only one non-Chilean, and that gentleman's a Peruvian. There are other parts to, ESG as well that are important. And I think what Paul raised is a good point, is you can't encapsulate all of them. There's certain aspects that for each company will, be applicable, and the smaller companies need to focus on those ones that are applicable to them. Okay,
I mean, I think there's quite a few clues there. So there are lots of topics we touched upon there, and maybe worth delving down on some of those on another occasion. But for today, appreciate your insights, coming up with slightly different angles, slightly different jurisdictions, different commodities, but nevertheless gives us a clue to what we should be thinking about before we kind of place the bet. And I mean, hopefully you both agree we're in a cycle, we're in a down cycle at the moment, and we will come out the other side. So do feel comfortable about that. I'm going to give you both 2 minutes each to sell your project to the listeners and viewers now. And Paul, I'm going to kick off with you. 2 minutes. Why should people be investing in Pan Asian Metals?
Thanks, Matt. Well, Pan Asian Metals is developing lithium projects. One lithium project. We have a lot of additional lithium applications. So we've effectively locked up the lithium belt in Thailand. Our objective is to initially produce a feasibility study which will allow us to produce 10,000 tonnes of lithium carbonate per year for a minimum of 10 years, which means it's bankable. And then we want to expand from there. Where we are located, we are literally a stone's throw from the Thai auto industry. It's likely that we could produce lithium chemicals on site or in the Eastern Economic Corridor in Thailand. Thailand has introduced a number of policies to encourage battery and electric vehicle production in Thailand. So they want to retain their position as number 4 in Asia and number 1 in Southeast Asia. That means they're providing a lot of incentives, tax incentives for companies who are building those factories. And then if we're producing lithium carbonate, we think we'll be the beneficiary of the same. What we've got to keep in mind in Thailand is that there's over 20 auto manufacturers operating there already. Toyota shifted its Prius battery recycling plant from Belgium to Thailand. Two Chinese companies have established factories there. That's BYD and Geely. We've got BMW and Mercedes and so on. So it's a really big market. They want to hold it. We're the only explorer in Thailand, only lithium explorer in Thailand, and we are really well positioned to move downstream and supply the Thai auto industry.
Thanks, Paul. And Jeff, 2 minutes.
Thanks, Matt. So as I mentioned earlier, Tesoro Gold's made a new discovery, a discovery of actually not only a deposit, but an entire new intrusive-related gold system in Chile. Has the potential to be multi-millions of ounces. As the best analogue is the Tintina province in Alaska, which is 50 million plus ounces. So we've got the tiger by the tail, for want of a better expression. We've explored less than 2% of our land holding, and we've turned up 1.1 million ounces in less than in just over 2.5 years. We'll move that project towards production. We're in the world's largest copper producing company, so it's a well-known mining jurisdiction. We're going to be using seawater for all our metallurgical processing. And in the next 6 to 12 months, we've got a series of milestones coming. First one's a scoping study. Second one's testing some of the new identified analogues to the existing Tenera deposit. We believe we'll turn up multiple deposits in this land package. We'll continue our permitting. And by the end of the year, hopefully we've made another discovery and we're on the path to, 2 million ounces in the next 2 years.
So thank you everyone for watching and listening to this. You've got 2 well-run companies, 2 good, strong management teams with projects. Patience is required in these markets. So while you're waiting, do have a look at Tesoro Gold and Pan Asia Metals. Thank you, gentlemen.
Thanks, Matt.
Thanks, Matt. Thanks, Paul.